Hi, my name is Justin and this is a video for Advanced Resources Global. These days there are a lot of people asking me what's my take on the Chinese economy turmoil and the forecasted decline in real estate in China and Hong Kong. My take on it is obviously there has been a decline, there is a decline currently, and it's going to persist in 2016. The reason for that is the whole Asian market actually as a whole, but especially the China and Hong Kong market, have been subject to a very big hype in terms of investor and mostly speculation as opposed to core fundamental. And what happens when you're in that kind of market is that the slightest little fluctuation, the slightest little trouble or anxiety creates a market movement where investors start to take out their investments, and it has a snowball effect in which the decline becomes more and more important. In the case of China economy as a whole, I think a lot of people are actually overreacting, and people are so used to China being a growing economy that when the growth declines a bit, but it's still a growth, but it's not as big as the year before, people start to freak out and see that um, decreased growth as an actual decline in the economy. Same in the stock market. I think a lot of stocks in the Chinese stock market are actually good stocks and good companies, but because of the market sentiment, it goes down. Now, what does that mean for the overall real estate market worldwide? Well, I think it represents a tremendous opportunity for all the people looking to get in other markets. Why? Because all the wealthy individuals in the Chinese markets, whether they are Chinese citizens or foreign investors currently investing in China, all those people are either going to take out their investment or choose to stop their ongoing, procedure or process to get in and just try to put their money elsewhere. Now, elsewhere that can be the big cities in America, San Francisco, New York, which has been hitting a record high in apartment prices at the moment, Sydney, and so on. All that money that should be going to Hong Kong and Shanghai, Beijing, and all the other cities in China is going to be really redirected to other areas. Now, I mean that as an opportunity, but let's not forget that when it comes to investments, opportunities generally come with risk. And the risk in this situation is that, again, the hype phenomenon is just transferred to other places. For example, I mentioned New York, and I'm personally very bearish or very cautious in regards to the New York real estate market, which has been considered as a haven for people trying to invest their capital. And it's been going up and up for a long time now. But again, all those markets, they tend to be going up because of speculation and not because of such strong fundamentals. So that's my take on it. I think that this turmoil in China is definitely going to affect the economy and the real estate market in China and Hong Kong. But I also believe that this is going to present an opportunity in the sense that other people are going to invest in other markets, Australia, America, maybe the more conservative Europe. And so you're going to see growth in those areas. But again, let's be very cautious to see, does that market really have strong fundamentals, or is it just a hype and people trying to park their money somewhere else? Thank you very much. You have a text post just below, and yeah, I don't know if you're watching this on YouTube or on my website, but also my website, advancedresourcesglobal.com. Thank you very much. Bye-bye.